Good day, everyone. My name is Andre Marais. I will be hosting today's seminar with a panel of experts from ENSafrica. Thank you so much for joining us. We've had a very good response to the adverts that went out, and we've got quite a lot of people attending here today. So we're really excited to be presenting this to you, and we hope that you can learn something from this. So today's seminar, as the advert said, relates to fintech and its application, all the different legal avenues and things that you need to consider. And by actually joining this seminar, I would assume that most of you actually know what fintech is, otherwise you wouldn't have bothered to be here. But just for the uninitiated and for those joining because they have nothing better to do, fintech basically just describes the technology around streamlining the financial services industry. So that can include anything from, in the old days, online banking would have been seen as cutting edge fintech. These days, it's a lot more refined than that. And that's why we're talking about this today. It's a massive focus area all around the world, but especially in Africa, it's found some very, very fertile ground. ENSafrica actually does have a virtual fintech team that's made up of a number of different streams, ranging from banking and finance to corporate commercial to tax to intellectual property and everything in between. So I would invite you to go to our website and look up the information on there to find the relevant people or to look at the relevant topics. I just want to introduce you to the panel that's going to be talking today. I will be doing as little talking as humanly possible and leaving it over to the experts. First of all, we have Mahesh Acharya. He is a corporate commercial director in our Kenyan office, and he's seen as the go-to fintech guy in Kenya. He has a string of awards and he's recognized as a true expert in the field in East Africa. Second, we have Hugo Bierman. He's a senior associate in the intellectual property team, and Hugo specializes in patents, but specifically in patents around technology and the software space. So he tends to have a lot of exposure to fintech type innovations. Third, we've got Ridwan Bodwa. He's the head of our TMT team. And if I had to read off his CV, we would be here for quite a long time. He has a lot of awards, and he's widely recognized as one of the best tech lawyers in South Africa, if not in Africa. And then last, but certainly not least, Angela, I'm going to get this wrong again, Itsikovitz, or Professor Angela. Again, if I had to rattle off her CV, we would spend half our time doing that. The short version is she is an executive in the banking and finance team in ENSafrica. She has a lot of experience, which isn't a reflection on her age, she just works very hard in the fintech space. And she specifically does a lot of work around banking and finance regulatory work as it applies to the fintech space. And perhaps that's a good place to kick off, Angela. I'm going to start with you. And maybe you can just tell us, I've heard some rumors and stories that the fintech industry isn't too heavily regulated. Is that true? Do you have any comments on that?
Thank you, Andre, and thank you for the introduction. Well, had you put your question, is it true that the fintech is unregulated? My response would certainly have been, well, Andre, that's in keeping with the American TV series, that's probably one of the biggest little lies. So while there's certainly no overarching or bespoke fintech legislation or regulation currently, it's not true that fintech is not regulated currently and as we speak in South Africa. So what I hope to do today is just to focus on the current regulation, the regulation as of today, and also as to the imminent future regulation. If I may, Andrea, I just want to pick up on what you said by way of introduction, and that is that fintech is a very broad topic encompassing all kinds of things. So if one could see fintech as a big overarching set, then there are lots and lots and lots of subsets to it, as you've alluded to. There's mobile payments, there's crowdfunding, there's peer-to-peer lending, there's insurtech, there's new payment technologies, and all of those are currently regulated to a larger or greater extent, even something as benign as gratuitous crowdfunding. But leaving that aside, I think the focus of today, at least in response to my question, or rather your question to me, Andre, is that the most regulation, both current and future, is taking place in the crypto space. Now that too is a subset, and the terms are used interchangeably. But really, crypto assets can be divided into smaller subsets, that of cryptocurrency on the one hand, and tokenization or initial coin offerings on the other. So I'm going to be focusing today on the regulation current and imminent of crypto assets, leaving aside regulation of the other fintech subsets or sets. So let's have a look at, I'm going to take a number of statutes which currently regulate fintech or cryptos and how this is going to change going forward. So let's start off with anti-money laundering, which is regulated, as I'm sure everybody knows, by the Prevention of Organized Crime Act, legislation relating to terrorism, and then, of course, the Financial Intelligence Center Act. Now, currently, as we speak, every person who plays in the fintech space, every person currently has a duty to report suspicious and unusual transactions. The reason for that is that the duty to report suspicious and unusual transactions is far more widely cast in the sense that it applies to every person who carries on business, any kind of business. So if you're a crypto asset exchange, you carry on business. If you keep cryptos in safe custody, you are carrying on business. If you make payments with crypto, you carry on business. If you invest or for clients, you're carrying on business. So every person currently, in whatever space, has to report suspicious and unusual transactions in keeping with Section 29 of FICA. What's coming is that all crypto asset service providers are going to have to register and will be treated as accountable institutions in terms of FICA. Now, I'm sure many of you will say, well, that's no big deal because we do that anyway. We already have KYC measures. We already have stringent onboarding requirements. Now, well, that may well be true. And I do know that many exchanges and other players are doing customer due diligence and KYC on their clients. Once the FICA legislation is amended to constitute everyone in the space as an accountable institution, then you're going to have to comply to the letter of the Financial Intelligence Center Act. Yes, the FICA adopts a risk-based approach, and you certainly do have some latitude in how you KYC your clients. But what people forget is that there are a number of prescriptions where you have no leeway and you have to comply with the letter of the law. You're going to have to have a detailed compliance risk management policy, which has to meet certain requirements, stringent record keeping. You're going to have to KYC beneficial owners. You're going to have to do screening, which again, some of you do and will continue to do. But just my takeaway there is that any persons who play in this space must please start now making sure that they comply with the letter of FICA. Who will be involved? Well, so-called crypto asset service providers, or CASPs. For the moment, those are people who exchange fiat currency for cryptocurrency, crypto to fiat, one crypto to another, and the moving of monies from one person's account to another. So that's AML. Currently regulated in that you have to report suspicious and unusual transactions. Going forward, you're an accountable institution and you have to comply to the letter with the Financial Intelligence Center Act. Now is a good time to make sure that you have a policy and that your policy reflects the requirements. Moving now to FAIS, Financial Advisory and Intermediary Services Act. I think it's currently fair to say that for the moment, you are not regulated, or players in the space are not regulated, unless, of course, you are in the ICO, initial coin offering space, and your ICO is such that it mirrors a security. If it has features that would constitute it or might suggest that it is security as defined in the Financial Markets Act or defined in FAIS, then you may already have to comply with FAIS and be registered as a financial services provider. Because South African law, or at least the regulation, adopts what we call a functional approach to regulation. It's technologically neutral. It's not a new space. We look at the functions that this crypto or that this token provides. But moving forward, most of you will probably know that the Financial Sector Conduct Authority has issued a declaration paper, open for comment, closed for comment now, and definitely the way forward is that any persons who play, for want of using an inelegant term, who play in the crypto space or who deal in crypto assets either in the form of cryptocurrencies or crypto tokens, will possibly be regulated by phase. What's going to happen is that the definition of financial product is going to be amended, and cryptos will now become a financial product, just as much as deposits, insurance policies, medical premiums, investments, and the like are currently financial products. Of course, financial products is not enough to bring you within phase. You would have to, in addition, have to be giving advice or rendering intermediary services. Now, before many of you are thinking, well, we must just make sure that we say we don't provide advice. That's not going to help you because you may well be rendering intermediary services. So even the safe custody of cryptos would constitute an intermediary service, even though no advice is provided. It's a double-edged sword in a sense. What the regulators are seeking to do is simply to say that cryptos are similar in nature to the existing range of products. Now, we know that that's not true. For all the products that are currently designated as financial products, all of them at least have a central issuer. Cryptos, for the main, have no central issuer. Nonetheless, it's not a fight worth having to argue that they are not similar in nature and can't simply be included, because they are going to be included. Difficulties there is the people, again, who play in the space are going to have to think about registering as financial services providers. You're going to have to think about a key individual, about having reps. And what's quite interesting is, will you meet the experience and the fit and proper requirements? What will your qualifications have to speak to, given the novelty of crypto assets and the ever-evolving nature of crypto assets? Also, is every single crypto asset, including an initial coin offering of the kind utility token, it's not really a financial product, although it could become one, are all of those persons also going to have to register in terms of phase? So that's what's coming. Registration as a financial services provider if you render advice or provide intermediary services. Difficulty there is trying to treat all cryptos as one size fits all. Moving very briefly to the Consumer Protection Act, I think it's correct to say that as we speak, you are governed by the Consumer Protection Act. I certainly think everyone would agree that you are providing services of a kind set out in the Consumer Protection Act. And I can tell you that although crypto may not be currency, may not be money, may not even be e-money, it certainly would meet the definition of consideration as that term is defined in the CPA. Fortunately, no registration requirement, but you really are going to have to make sure that your terms and conditions are fair, clear, and that you correct any asymmetry, which is hugely prevalent in the market of cryptos. Leaving the big ticket issue for last, and that is exchange control. Now, the really big ticket issue at the moment is, do crypto assets constitute capital as that term is defined in the exchange control regulations, particularly regulation 10.1c? Now, this question has never come, or has not yet come crisply before the courts. Neither do the exchange control regulations speak pertinently to it. But what is quite worrying, and certainly set the cat amongst the pigeons, is the IFWG, that's a working group comprised of Treasury, FSCA, the Prudential Authority, and the tax authorities, they have come out with a statement in their FAQs to say that if you buy cryptos on a local exchange and you move those cryptos to a foreign exchange, you will have breached Regulation 10.1c, and breach could constitute, or breach of that regulation would constitute, a criminal offense. So I'm going to leave you there, and I'm going to leave you with that uncertainty. But as I say, it's something that we are doing a lot of work around currently, and certainly something you can't shut your eyes to, particularly those in the arbitrage space, but not only. So, Andre, I hope then I've dispelled the myth, or shown that it is not true, but a big little lie, that fintech is not regulated, and certainly will be more stringently regulated when the likes of the huge scams that are happening out there happen more frequently. And I think it's a challenge to balance regulation with financial innovation. We certainly don't want to be behind the curve in this very interesting space. Then, so as not to leave you feeling gloomy, I just want to say it's a hugely interesting space. There's so much happening here. There's lots of countries are looking at central bank-backed currencies, where the SARB itself issues a crypto. Stable coins, all kinds of very, very interesting things happening in the space. So thank you, Andre. And
that's fascinating. It seems to be one of those instances where the technology and the innovation outstrips legislation and regulation. And as you point out, there's always going to be a balance to try and not over-regulate newly sort of innovated products. But sort of stepping away from the fin side of things and moving more to the tech side of things, Ridwan, if I can ask you, as a technology and a data lawyer, can you explain to us in generic terms what are the technology and data privacy considerations with fintech?
Thank you, Andre, and thanks, Angela. Always very difficult to speak after Angela, one of the most eloquent speakers you will ever find. So thanks, Angela. So I focus, as Andre said, more on the tech side of fintech. When I say tech side, I don't mean I'm a techie. I don't mean I'm an IT person at all. ENS is not an IT company, but more on the commercialization of technology and the legal aspects pertaining thereto. I think before one can, as a fintech, before one can even think about commercializing a product or a new product or innovating, there are a number of considerations which need to take place. The first of which, and probably one of the more obvious ones, is protecting your IP. I won't go into a lot of detail on that. Hugo will speak to that in a lot more detail shortly. But then it's doing the basics as a company, making sure that you've got proper employment contracts in place, looking at your ecosystem of service providers, making sure that if you are contracting with a developer or a development company, that you've got proper contracts in place, not just to secure your IP, but to ensure things like business continuity, stability of your product, future innovation, and the like. Looking at things like your cloud hosting service providers, making sure that they are able to maintain the right levels of uptime, etc., so that your product is stable and your users have a very positive experience with your product. So those are just some of the considerations before which need to take place even before you can think about commercializing your product. The other big thing which is really topical at the moment is data privacy in the realm of fintechs. Building on what Angela has said, fintech has a myriad of laws applying to it, one of which are data privacy laws. We speak about POPI. I mean, POPI has been very topical over the last month and a half or so. If, like me, I've been a privacy lawyer for more than 15 years now. I've been dealing with privacy issues. And in the fintech space, the privacy issues, it's not just limited to privacy or POPI compliance. A big part of the work which we do with our clients, whether it's fintechs, whether it's banks or financial services companies, or even just platform providers or e-commerce providers, is how do you monetize data? How do you commercialize data? Much of the value from fintechs actually comes from the data which you're sitting on. But before you can think about monetizing and commercializing that data, there are a myriad of laws which you need to get, like privacy laws such as POPI in South Africa and a number of other laws in other jurisdictions as well. There's things like cybersecurity laws. Then there's regulatory interventions, for example, the South African Reserve Bank circulars on outsourcing, on cloud computing and the like. So all of these factor into your pre-commercialization thinking, and there's a lot of work that needs to be done upfront as a fintech before you can start commercializing your product. Then it comes to the actual commercialization of your product when you're ready to go to market. Obviously, when you're looking at fintech from a client-facing perspective, there are a number of things which you need to do, which sound quite basic, but a lot of companies actually fall short on these. So do you have proper terms and conditions on your platforms or on your applications, on your e-commerce sites? Do you have proper privacy policies in place? Is your terms and conditions, as Angela mentioned, compliant with laws such as the Consumer Protection Act? Is it compliant with ACTA, the Electronic Communications and Transactions Act, and similar legislation around the world? So much of our work with fintechs actually comes in the pre-commercialization space, and then in the actual space of when you're starting to commercialize your product. On the other end of the spectrum, we do a lot of work for banks, financial services companies, and other institutions. Banks, as Andre has mentioned, have been involved in technology for a long time. I've been working primarily in the finance with banks for probably the past 15 years, and purely in the technology space. And the amount of money banks spend on technology, I mean, if you look at it, banks are in essence technology companies. And as a bank, we've done some, on behalf of banks, we've done some really interesting work. We've looked at either banks viewing fintechs or startups as threats to their current and that leads to all sorts of different initiatives and transactions, whether you wish to acquire that specific startup and integrate their offering into the bank's traditional offering, or acquire that startup with a view to actually sidelining that startup and removing a competitor. Obviously, that raises a whole lot of competition law issues, or whether you actually wish to engage with a startup or a fintech in a more collaborative manner. Many times we act on behalf of banks and financial services companies where they're actually embracing or taking on a fintech's specific product or service. And then the last area which we do a lot of work on the commercialization side is for platform providers. So it's not just banks who are interested in fintechs. Telcos are becoming more and more, are moving more and more into the realm of financial services and becoming financial services players. And a lot of the work we do is actually on behalf of telcos with a view to actually developing fintech type solutions for their client, which is again enabled by technology. So there's a number of, depending on the type of clients we act for, there's a number of considerations which one needs to look at from a legal perspective. And these become quite complicated. Probably the area where or if we're looking at current trends in the market, one of the biggest areas where fintechs are actually focusing on is in the realm of data commercialization. And I think where we differentiate ourselves from a lot of our competitors and a lot of firms out there is anybody can regurgitate POPI to you and tell you this is what the X is. But much of the work which we do is actually in the realm of data commercialization or data monetization. So how do you actually get around laws such as POPI? How do you get around other laws which doesn't necessarily preclude you from monetizing data, but which forces you to behave in a certain manner? And we've done some really interesting work in that space. We also do a lot of, on behalf of fintechs, when fintechs go to market, a lot of the work and a lot of the channels to market is non-traditional. So social media marketing has become a big thing. Direct marketing as well is becoming a big thing. And those themselves are actually have a myriad of legal issues attached to them, especially in the realm of social media marketing, whether you are engaging with an influencer, whether you are using platforms such as more common, they use social media platforms such as Facebook or Instagram and the like. All of those have a lot of legal issues, hidden legal issues, which a lot of companies are simply not aware of. So it's important to have a good cognizance and good awareness of the laws affecting your actual go-to-market strategy and your actual marketing of your products. And then the other area where we're seeing a lot of work coming from fintechs and companies engaging with fintechs is especially due to lockdown, or probably, well, I wouldn't say especially due to lockdown, but lockdown has actually served as a catalyst for this, but it's in the realm of electronic contracting, digitization, and what can and what can't companies do when contracting with their clients. So looking at technology or fintech from a technology perspective, and more specifically a commercialization perspective, there's a number of legal issues attached to it. Data privacy is probably the foremost at the moment, and it's going to be the most topical issue. Globally, fintechs are being looked at with a lot of scrutiny by regulators, and understanding not just the laws and the basic bread and butter compliance around laws such as POPI, but how does one actually utilize or build a product, innovate, monetize and commercialize data within the framework of the law. That's where a lot of consideration needs to take place. And from a tech perspective, that's more or less where we are, Andre.
Fascinating. It's exactly as with Angela's, the innovation just seems to happen so quickly that it almost seems that you try to be proactive, but it's very difficult to be, because your clients are almost innovating out from under you all the time. It's a great position to be in. Yeah, so I mean, the good thing, a lot of laws are drafted in a technology neutral manner, so it does enable you to provide very crafty solutions for clients. But obviously, as your business evolves and as fintech evolves, as technology evolves and innovates, we constantly need to be looking at companies' business models, fintech, the business models of fintechs to see, is there anything in here infringing on any new laws? The law sometimes takes a while to catch up, but the innovation generally is always, I mean, would always outpace the law. But as you debate, there are still laws which need to be factored in. There still are a lot of legal considerations which companies, fintechs especially, and customers and clients of fintechs themselves need to consider. So, for example, we act for a lot of e-commerce providers, and some of these e-commerce providers utilize a specific payment type technology, and having a full appreciation of whether that payment technology is legally sound or not, you may be offering your clients a payment mechanism on your website, which is actually contravening a number of laws, and you yourself as a website publisher or as an e-commerce provider may be at risk. Absolutely fascinating. I think we can talk about that stuff for hours. A word that's popped up quite a few times is innovation. You touched very briefly on some of the intellectual property rights that play a role. And I want to bring in Hugo here, but before I do, we actually do have a question and answer thingy at the bottom there. So I would encourage all the participants, please use that. If you do have any questions and it relates to any of the panelists, I will certainly bring it in, and we will have a bit of a question and answer session at the end. But if it's relevant to the specific section, I'll try to force them to answer it at the right time. So Hugo, obviously there's a lot of innovation that goes into any of the new fintech startups, whether that's done by the more traditional banks and so on, or whether it's done by these disruptors that are entering the market. So what types of intellectual property come into play, and what proactive steps should innovators take to protect their intellectual property?
Thanks, Andre, and hi everyone from my side. It's nice to be talking about this interesting topic, and thanks to Angela and Ridwan as well for those very useful comments. And I think, firstly, I fully agree with you, Andre. There's so much innovation happening, and it's nice to be at the forefront of a lot of that. And Ridwan and Angela have already given us a lot of examples of the types of sort of tech innovations that we are seeing. From an intellectual property perspective, what you typically see is you see a bundle of intellectual property rights arising. So not necessarily just one intellectual property right associated with the fintech business. You typically see this whole bundle. And when we use the word intellectual property or IP, that's obviously an umbrella term that we use to refer to all of these rights. And when it comes to a fintech business, in my experience, and Andre, I'm sure you'd agree, the most important ones are typically copyright, patents, trademarks, and then of course the internal know-how and trademarks, trade secrets of a business that can be immensely valuable. And I'm a bit biased. I'm a patent attorney by trade, so forgive me if I talk a lot about patents today. But turning to patents very quickly, and I'll try to touch on the others as well. when you hear the word fintech, traditionally you tend to think of startups and small businesses coming in and sort of disrupting the status quo and taking market share away from the big players. And when you look at patent filers, in a sense, that is true. We are seeing a lot of smaller entities coming in with innovative new technologies, shaking up the market. And we can see from the patent filings that these entities are protecting their innovations. And patents are usually a very good gauge indicator of the level of innovation that's going on in a particular space. But as much as it's true for startups and small businesses, it's equally true for the large institutions. And Ridwan, you touched on it, and I'm very glad you mentioned it. And you mentioned banks and telcos, and I wanted to say the same thing. What we're seeing at the moment is the sort of traditional old school institutions like banks and large telecommunications entities are in a sense turning into fintech hubs. And I mean, we can debate the reasons for that, and it's probably the market forces that are pulling it in that direction. But these entities are really entering the fray in a major way. And if we maybe go back 10 or 20 years and we take the banks as an example, you wouldn't really have associated a bank with being, you know, a massive fintech player and filing hundreds of patents. Maybe from a hardware perspective, you would have maybe seen banks filing patent applications for their technology, but not from a software perspective. And that is really changing. We are seeing the banks and the telcos turning into fintech players, coming up with so many new innovations and then protecting these by way of patent where necessary and where appropriate. And I thought I'd just use one example today. I know there's a lot of African institutions on the webinar, so I don't want to be biased or subjective, so I'm not going to mention an African example. I'm just going to use Bank of America as a neutral example. I think Bank of America is a nice example of a traditional old school financial institution, second biggest bank in the USA. And I just checked yesterday and I saw that they filed 722 new patent applications in 2020 alone. And that is only in the USA. So not even in considering other countries. That equates to 13 or 14 new patent applications every week filed by Bank of America in the USA alone. And if you go and drill down into the topics, so the subject matter of these applications, it's almost exclusively fintech. It's information security, ATM technology, ATM alternatives, fraud, looking at data integrity, looking at alternative payment techniques. So, I mean, from a patent perspective, the banks, big and small players are entering the fray in a massive way. Very important to note from a patent perspective is this whole requirement of novelty. So when you think about patents, you need to think about novelty. What that means is when you file a patent application for your innovation, at the day of filing that application, the invention essentially still needs to be a secret. And I think Ridwan touched on it, you know, is one of the first things you need to look at when you are commercializing your business is to make sure that your IP is protected at the right time. And with patents, the time to protect the innovation is before it goes out into the public domain. And that is extremely, extremely important. So moving away from patents, I just quickly want to touch on a few of the other forms of IP rights as well, Andre. Obviously, most fintech businesses are very software heavy, and that's where copyright comes in. So a patent doesn't protect the underlying software, it protects the processes that are implemented by the software. But the software itself is protected usually by copyright. Copyright is something that you can't apply to register, you know, it's something that comes into existence automatically. But what's very important to remember with copyright is that you need to make sure that you actually have ownership of the copyright, especially when you're collaborating with third parties, as Ridwan mentioned, and when it's not necessarily your own employees developing the software. You need to make sure that you have the appropriate agreements in place to make sure that the ownership of the copyright, because that's really associated with the value of data, sits with the correct entity. And Andre, maybe just as a final comment on another form of intellectual property that's key for fintech businesses, and that's obviously trademarks. It's key for all types of businesses, and fintechs are no different. The trademark is obviously your brand. That's the way that you protect your brands, your logos, your devices. So that which you use to distinguish your business and your goods and services from those of others. So when you're just starting up your business, obviously things like patents and software and data, those are key. And you might think that those are the most valuable things. But as your business grows, 5, 10, 15, 20 years down the line, technology changes, data changes, but what typically remains the same is your brand, your trademark. And that's why it's extremely important to take proactive steps, not only to protect your trademark, your patents, but also to protect things like your trademarks. I'm just going to leave it there for now, Andre. Thanks.
That's great. Thanks, Hugo. You mentioned the big banks turning into tech hubs. I mentioned that to one of our clients the other day, and he told me to be very careful saying that around banking executives. They still like to see themselves as banks, although probably one level below them, a lot of people are buying into this concept that they're turning into technology centers and fintech centers more than anything else. And their IP is becoming more and more valuable as, number one, a differentiator, but also as a potential stream for alternative income. So it's a great time to be in financial services. We've got one question here, which I'm not actually going to answer, but it segues quite nicely into sort of Mahesh's side. The question basically asks the territorial nature of all of the advice or all of the guidance that we're giving. So Angela's regulatory advice, Ridwan's commercial advice, and your IP advice, each one of these are tied to a specific territory. And if there's one thing that fintechs tend to not be is territorial. They're very sort of territory agnostic almost. And that becomes very difficult for someone to do if you need to adhere to data privacy laws in 15 or 20 different countries. It becomes a very difficult exercise. I know people like Ridwan and Angela and Hugo are all experts at sort of advising cross-border transactions. But I'd like to go to Mahesh specifically, and can you perhaps just tell us a little bit more about the fintech space in Kenya and in the wider East African region?
Thanks, Andre. Thank you all for attending. So I'm based in the ENSafrica office in Nairobi, and when you speak of fintech in Kenya, particularly, it's difficult to not mention M-Pesa. And just to give you some statistics behind M-Pesa. So in the last 12 months, they had 15.2 billion transactions go through the system. That's roughly 200,000 transactions every minute. Through the system, they moved $220 billion through one system in one country. So this gives you a picture on the scale of what mobile money does in Kenya, and therefore the fact that a lot of the fintech operations in the country have M-Pesa as their backbone. The largest fintech categories, at least in Kenya at the moment, continue to be around the payments and remittance space, probably accounting for about 60% of players in this market. This is then followed by lending, so digital lending through mobile money. And now recently we have seen an uptake in blockchain, insurtech, business administration, and there has been a lot of chatter around open banking, which promises to be the new frontier probably in the next 5 to 6 years. So that just gives you, Andre, a rough idea around what the space is like in Kenya. From an Africa perspective, the stats are interesting as well. So 58% of all the electronic wallets in the world sit in Africa, right? From an investment perspective, 39% of all the FDI that came into Africa in 2020 was linked to fintech. This gives you an idea of where this is headed and how big fintech is for Africa.
That's fascinating. I actually saw recently that Safaricom is actually the 12th biggest brand in Africa, and that must sort of all be built on the back of M-Pesa and all of those numbers that you just mentioned there. Tell me, what's the regulatory regime like in sort of Kenya and East Africa?
So not very different from what Angela had described. And you know, the dream is obviously to have a fully banked Africa, and a lot of the success we have seen so far has been as a result of a lighter regulatory environment. You know, when M-Pesa started in 2007, there was no regulatory environment. The national payment systems legislation and regulation around it only came in 7 years later. So that probably was one of the reasons why this kind of skyrocketed, particularly for Kenya. But having said that, you know, like the other panelists had mentioned, there's innovation, which obviously overtakes regulation. But there has been interesting developments around trying to catch up. We are, at least in the East African space, we have new legislation around regulation of digital banking and lending. This is still in debate form, but the regulators are keen to bring this in play. There is chatter around licensing of mobile money platforms, specific licensing, not just authorization orders. Of course, data protection is a big thing, particularly in Kenya. This is quite new, just about 18 months old. And then the new concept around sandboxes and regulators creating test environments through which innovation is tested within existing legislation, and then hopefully building the legislation based on these test environments. Some examples for Kenya are crowdfunding, data analytics, blockchain solutions, and investment solutions, all being driven by the Capital Markets Authority. The insurance regulators also put together some sandboxes. But apart from this good legislation, you also have legislation that kind of curtails fintech and the development of fintech. So in Kenya particularly, we have new legislation, tax legislation around digital service tax, and recently introduced value-added tax on marketplaces. So you have your traditional regulation around technology, but then what we are also seeing is the taxman wanting a share of this pie and creating legislation around fintech.
The taxman will always get his cut. That's why we have a big tax department. Tell me, in the startup funding environment in Kenya, what do early stage African startups face in terms of obstacles? And I'm not expecting you to dish out advice, but what have you seen in the market? What tends to work?
Well, I think Africa is quite ripe for fintech investment. In the last 6 years, the reported investment is around $1 billion. But interestingly, a third of that $1 billion came in between 2020 and 2021. So you can see a lot of it is towards the tail end of that. And you know, there has been overwhelming signs of interest in fintech, particularly as Ridwan said, you know, being catalyzed by COVID. So I think Africa is ripe for it. Why is Africa so fertile? So 2 out of 3 adults in Africa don't have a bank account. Okay. Despite that, 80% of the adults have a mobile phone, right? So access to technology. You have a very young population with, you know, high tech uptake. And of course, like I said earlier, lower regulation, allowing, you know, things like commoditization of data and allowing micro lending in the space. So those are the reasons I think that make Africa quite attractive from an investment perspective. But it also comes with its own hurdles. You can't avoid bureaucracy. You can't avoid corruption. Those are some of the realities we deal with. The time it takes to set up businesses, just general businesses, the number of additional licenses outside of the fintech space that one needs to get. So those are some of the common hurdles that we see around startups.
I suspect that will be the same for most of the African regions, almost all of those things that you mentioned there. I'd like to sort of circle back to that concept of sandboxes that you mentioned, and I'd like to pull Angela back into the conversation. Angela, do you know if there are similar type of systems or processes in place in South Africa or in any other African region for that matter, where they are looking at the sandbox concept? Angela, you're on mute.
Sorry, thank you, Andre. Yes, indeed, South Africa does have a fairly well-developed sandbox regime. So, yeah, we do. I don't know about other African countries, but certainly South Africa does and has had for quite some time. If I may, Andre, sorry, it's outside of the question that you asked me, but I just want to make one quite interesting point on what Mahesh said, and to our earlier point of innovation, regulation mustn't stifle innovation. Just to his point as to how well M-Pesa has done. Now, we were actually involved in M-Pesa South Africa, and M-Pesa South Africa was a dismal failure. I think we got it wrong in that we thought that there were more persons who were unbanked than there actually are, particularly given that Mzansi account had just launched. But more so, it goes to the very point that regulation can kill innovation. And that's exactly what happened with M-Pesa in South Africa. The regulation was just too constricted and posed too many hurdles for it to fly, as distinct from Kenya, as Mahesh said, where for a large time, that kind of MNO regulation was non-existent. So just wanted to make that point. Thank you, Andre.
That's exactly, it comes back to that balance that you mentioned between stimulating innovation and regulating what can and can't be done. And unfortunately, there are always going to be people who try to, well, let's say outstrip regulation to innovate faster. I want to take one of the questions around, I briefly mentioned it, the territoriality of a lot of these things. And it's obviously, it's impossible to give specific legal advice around this. I'm going to put Ridwan on the spot. I'm not going to make him ask questions about foreign jurisdictions. But I think there are practical ways that you can assist clients. Ridwan, can you just speak to those a little bit?
Correct. So if we look at the question, it's how do you approach data privacy from a multi-jurisdictional perspective, especially when you're working off a limited budget. I think one of the things which we factor in is how deep a level in assurance do you wish to have from local counsel, and also what your budget and the nature of your questions are. Generally, if your questions are quite superficial, you just want to have an understanding. Are they specific countries? What do the laws say? Are they similar to South Africa, or what are the differences from one jurisdiction to the other? One of the benefits of being part or coming to a firm like ENSafrica is we've got, apart from having very deep expertise and deep experts, not just in South Africa, but also Mahesh and his team in Kenya and across a number of our hubs. We also have a very, very wide network, and we generally provide a one-stop shop for our clients. We bear in mind the client's budget always when we are looking at multi-jurisdictional surveys and the like. And part of the benefit of us doing a lot of work in Africa on a regular level is we do have much of the answers already readily available. And there's a lot of quick wins which we achieve for our clients. So we seek to balance pragmatism with what type of level of assurance the client actually wants. If, for example, if a client wants local counsel to stamp to say, this is a local law advice, then obviously your costs are going to escalate. I wouldn't say significantly, because again, we can manage those costs for you being part of a wide network. But if you just want to have a good feel for what the laws in specific countries say, if you want to know, what are the variants between, say, if you're based in South Africa or Mauritius or Kenya, what are the variants between your local laws and laws in other countries, we can focus on that. And because we do a lot of work in Africa specifically, we've got a lot of the question or the answers readily available based on our experience and based on our expertise. So I hope that does answer your question.
Absolutely. I think it's the same in the intellectual property space. You can either give a high level overview, or you can pull in some of our local offices or our agents scattered all over Africa and actually all over the world. There's another question that I just wanted to bounce off of Hugo. You mentioned briefly some of the registration of intellectual property rights. Do you just want to sort of say a little bit more about that? Specifically, what are the advantages to registering, for instance, your trademarks or your patents? I know copyright can't be registered, but do you have options around that?
Oh, sure. Thanks, Andre. That's a good question. And I think there's basically two ways to look at that. And you can think of it almost in a sense like carrots and sticks, like rewards and punishment. But before I get to those two buckets, as I mentioned with patents, there are certain types of IP that you just need to register, otherwise the rights will be lost. So that's the first important thing to bear in mind, especially with things like patents and industrial designs. If you don't file an application and you launch let's say the financial technology into the market, it's typically too late to then go back later and say, now we want to register. That's the first thing. So getting back to my sort of carrot and sticks metaphor, I typically like the carrots more, but the sticks would be the traditional way of thinking about IP. So that would be saying, well, I want to register my patents and trademarks because I want a monopoly. I want to keep others out of the market. I want to have that deterrent value. And that's why I want to register. So if someone gets too close to me, I'm going to enforce my rights. And that's very true. I mean, there's so much merit in that. And it remains one of the best reasons why you should do that, especially with something like a trademark. It's just so much more difficult to enforce a trademark if you don't have it registered. So, but those are the sticks. I typically like to look at the carrots, especially with technology companies. So the carrots would be things like, look at it this way. You are building a business. You're trying to build value, and you should look at IP as an asset that's going to add value to your business. I actually made a note here. There's a very interesting study that I read recently, and Andre and I have actually chatted about it. It's the European IP Office did a study on 127,000 European companies where they compared companies that registered their patents and trademarks versus companies that don't. And they got some staggering results. For the companies that register patents, they found that those on average have a 36% higher revenue per employee, and they pay 53% higher wages. For companies that register trademarks, they found that they've got 21% higher revenue, and they pay on average 27% higher wages. So, I mean, that's more the way that I like to look at it is from a value perspective. You want to add value to your business, and being a large sort of corporate law firm, ENSafrica, we do a lot of due diligence work. And I can tell you now that one of the first things that investors look at these days when they're looking at a business, and the same would apply to a fintech business, is how are they dealing with IP? Are they identifying IP in the business? Are they taking proactive steps to register? Or is it just a free-for-all? Are they just letting it go and letting competitors use that IP? So that's very important. And we want to look at it from a value perspective. Maybe as a final comment, Andre, a bit more fuzzy, but it's another very interesting point to me is how IP ties in with the notion of company culture, right? And it's obviously very important to have a culture of innovation in your business, because you want, at the end of the day, you want customers to pay you for your products and services. You want them to attach value, and you want to attract top talent to your company. And one of the ways in which you do that is to create a culture of innovation. If you think about all sort of the companies in the world that would be seen as the most innovative, right? Your IBMs, your Samsungs, your Microsofts of the world. Those companies use IP, they leverage IP to create the culture of innovation. And it's almost like a self-fulfilling prophecy then, where it then sort of creates more and more innovation in the business. Yeah, so thanks for that question, Andre.
Yeah, just one thing I've also noticed is that financial institutions are becoming more and more interested in using IP as security when they are lending money, and fintechs are right up there. When the fintech comes and looks for funding, then the first thing they ask them, where's your IP, how much is it worth, and can we take security over that? So it's a very interesting notion. We have another question, and we're almost out of time, so I'm going to put Mahesh on the spot to answer this in literally 1 minute. And what are some of the considerations on the ethical use of data when planning to monetize data? I think especially in East Africa, you mentioned some of the less regulated places. I think that's where the ethics may come in a little bit more. And have you got any views on that very quickly? I know you can write a dissertation about that, but
yeah, I'll probably defer to Ridwan on this one. He's the super expert on it. So Ridwan, bail out.
I'm glad to take this one. Thanks. So literally, there have been textbooks written on this point. A few years ago, I attended a conference on behalf of the United Nations. I'm a member of a group called Data Governance and AI Expert Group of the UN. And one of my colleagues, I think, summed it up beautifully. He says, as lawyers, we are not really concerned about the ethical or unethical use of data. We are concerned with the consequences of that use. So I'm probably dodging this question entirely by saying that. But I think the question is not so much for us as lawyers, or the law doesn't tell you, where do you draw ethical lines or not. But what the law does tell you is what can you do with data in a lawful manner and what can't you do with that data. And that's where we can give you a considerable amount of advice. When it comes to things like, are you, for example, using data and your data may be racially biased or something? As lawyers, we can tell you, yes, there's a constitution, yes, there are equality laws, but really we can't do more than that. If there's a consequence of you then going on and utilizing that data and your perhaps your data may be skewed, your algorithms may be skewed, racially biased and the like, if there's a consequence of that, then that's where we would step in. But if you laws, so for example, if you wish to use artificial intelligence, we can tell you, for example, this is more or less what Poppy says. If you wish to engage in direct marketing, if you wish to merge databases, we can tell you what the law says. We can tell you how to, I wouldn't say circumvent the law, but how to utilize that data in a lawful manner so as that you're not infringing legislation. But beyond that, I think it becomes quite difficult for lawyers to be preaching on ethics simply because everyone's ethics differ. And it become a minefield when we speak about legal ethics.
I think that's a great place, and I think we'll leave it there. The ethics around something like data, as I said, like you said, there are handbooks written about these things, and we actually had a very interesting session recently on the intersection between POPI and IP, where a lot of these ethical, not quite ethical, they were ethical a long time ago, and now they're sort of legislation, where a lot of these things came up and a lot of those considerations were brought up. And I would encourage you to go and listen to that session if you want to learn more about that. Okay, so our time's up. Thank you so much for everyone for joining. I think the value of a firm like ENSafrica is just sort of accentuated by these type of sessions where we can bring together 4 true experts in a field. And I mean, the other 40 experts that we could have brought, we had to beat away with a stick because we could only go with 4. The reality is we do have very, very deep experience and very wide experience. And both of those elements are absolutely central to sort of getting successful and the best advice that you possibly can for your business. So thank you everyone for joining. The session, I understand, has been recorded and has been streamed, so it should be available to everyone. Please don't hesitate to reach out to any of the panelists if you have any specific questions or if you would like to explore any of the things that we discussed in more detail. Thank you, everyone. Goodbye.
Thanks, everyone. Bye-bye.
Thanks, everyone.
Thank you. Thanks, Andre. Thanks, everyone.